Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Tuesday, February 16th. Hope you guys had a great long weekend here. We'll get right into it. This week is a short week, but we do got a lot compacted into a short week for data this week. Today we just got two items here, and that is the Empire State Index. This is the manufacturing region in the New York region. So as you can see, we have a lot of contraction there. We had a negative 19.4 back in January. It was supposed to improve a little bit to 12, and it still improved, but not to the forecast. It still was worse than expectations at 16.6 for the month of February. So manufacturing has been down for quite a while, actually quite a few months in the New York region. So this is something we need to keep an eye on, especially when the Fed raised rates in December. Which manufacturing seems to be kind of hurting as the cost of our goods being shipped overseas is a little bit more expensive now. We also got Home Builders Index. This is the confidence level of home builders out there, and this kind of helps determine if they're going to be building more, if they think there's enough out there for the supply and demand, if there's enough demand out there to build more, or if they're going to pull back or not. And right now, it dipped a little bit, so more than expectations. So it went from 61 with the expectation of 59 all the way down to 58. So this is another thing that I look at. So the data today is not as good. Now tomorrow will be important. We got a lot of data, but the one that will be important will be the FOMC minutes. I'm going to read through there, see the thought process, and see if it was unanimous, along those lines with the thought process. So so be prepared for some volatility tomorrow. Stock market's up today. It had a nice little rally on Friday, and it's kind of continuing its trek today. There's some of the good news for them. What they liked was some like Russia, Saudi Arabia, and a few of the other oil-producing countries basically said they're going to go ahead and make some cuts in their production levels, but they haven't said full cuts. So we're not sure how to take that yet, but it looks like it could be a positive moment because a lot of them are struggling with the price of barrel being so low at $30 a barrel right now. Actually, it's just under $30 a barrel, and that's hurting a lot of those oil-producing countries, especially Russia. There's also today comments made by Mario Draghi, who is the president of the ECB, or European Central Bank, and basically kind of insinuating that there's going to be more stimulus coming from them in March. So that's also helping the markets a bit. Today we got quite a few Fed speakers speaking today, so depending on what they say, that could potentially create some volatility in the markets as well. Some data came out in Japan, basically showing that their GDP is shrinking again. This is like the second time in 3 quarters that their GDP shrank, so they've been struggling for a long time to get out of this recession and been trying to do some stimulus, and they might have to create some more stimulus packages to try to get themselves out of this funk, so to speak. Let's take a look here at the bond market and see what we're doing. We're actually down for the day. Currently, we're down about 10 basis points from where we left off on Friday, which translates to pricing to be for the worse. So that means we got pricing's not as good as it was on Friday in that regard. As we mentioned before, we did pull back a bit from the 200-day moving average. So we don't really have that, and right now that we're below the 10-day moving average, so at some point we'll try to bounce above that. You'll see that starting to come downwards as the last 3 days came down, but at some point we might touch off the 200-day moving average before we get another bounce up. Alright folks, so rates are up a little bit today while the stock market's up, and this week will be very volatile. You guys have a great day. Thanks so much for watching. We'll see you guys tomorrow.